This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil rose on Monday as supply concerns driven by lower OPEC output, unrest in Libya and sanctions on Russia outweighed fears of demand sapping global recession. Eurozone inflation hit yet another record high in June, strengthening the case for rapid European Central Bank rate increases, while U.S. consumer sentiment hit a record low. Brent crude rose $1.55, or 1.4%, to $113.18 a barrel by 13:18 GMT after falling more than $1 in early trade. U.S. West Texas Intermediate (WTI) crude rose $1.34, or 1.2%, to $109.77. The Organization of the Petroleum Exporting Countries, OPEC, missed a target to boost output in June, a Reuters survey found.
Brent prices could soar to a stratospheric $380 a barrel in the most extreme scenario of Russia slashing oil production by 5 million barrels per day, BPD, in retaliation to a price cap being considered by the Group of Seven, analysts at J.P. Morgan said in a note dated July 1. G7 economic powers agreed last week to explore imposing a ban on transporting Russian oil that has been sold above a certain price, aiming to limit Moscow's ability to fund its invasion of Ukraine, which Moscow describes as a special operation. A $50-60 per barrel price cap would likely serve the G7 goals of reducing oil revenues for Russia while assuring barrels continue to flow, the bank said.
Moving on to the top news in the energy sector.
Germany's government will have the power to take stakes in utilities and impose emergency levies on consumers under proposed legal changes now under discussion, three sources told Reuters, as Berlin moves to beef up energy security. Ministers are scrambling to deal with the impact of soaring energy prices on electricity firms after Russia's invasion of Ukraine, with Economy Minister Robert Habeck recently warning of a Lehman effect, as suppliers face soaring costs to meet obligations to customers. Officials have been talking to Uniper, the largest buyer of Russian gas in Germany, about a bailout, and the sources said Berlin wants to ensure similar rescue measures are available for other companies if required.
India will only withdraw its windfall tax introduced last week for oil producers and refiners if global prices of crude fall as much as $40 a barrel from present levels, Revenue Secretary Tarun Bajaj told Reuters on Monday. The tax on firms that have increased product exports to gain from higher overseas margins took effect on July 1, as the government moves to boost domestic supply and revenue. The taxes, and some accompanying export curbs, will hit the earnings of companies such as Reliance Industries, Nayara Energy, which is partly owned by Russia's Rosneft, the Oil and Natural Gas Corp, Oil India Limited and Vedanta Limited.
Next, we have the top news in metal markets.
Australia will provide 34 additional armoured vehicles to Ukraine and prohibit Russian gold imports, Australian Prime Minister Anthony Albanese said in Kyiv on Sunday. Speaking at a press conference in Ukraine's capital alongside President Volodymyr Zelensky, Albanese said Australia would impose sanctions and travel bans on 16 more Russian ministers and oligarchs, bringing the total number of Russian individuals sanctioned by Australia to 843. Albanese said Australia would give Ukraine 14 more armoured personnel carriers and 20 Bushmaster vehicles.
Copper prices fell to 17-month lows on Monday as new COVID restrictions in top consumer China, slowing global manufacturing activity and a jump in inventories sparked demand worries and a sell-off. Benchmark copper on the London Metal Exchange, LME, was down 0.8% at $7,982 a ton at 16:02 GMT. Prices of the metal used in power and construction earlier fell to $7,918, the lowest since February 2021. China's manufacturers have had an awful time. People are fearful of inflation and recession, but the probability of recession is less than 50%, said Dan Smith, managing director at Commodity Market Analytics. We will now look at the top news in the agricultural sector. U.S. wheat futures tumbled on Friday to levels not seen since Russia's invasion of Ukraine in February disrupted flows from the Black Sea breadbasket region, pressured by a firmer U.S. dollar and rising global supplies from the Northern Hemisphere's harvest. Soybeans and corn retreated in tandem with wheat in risk-off trading ahead of the long U.S. Independence Day holiday weekend and worries about tepid demand and the broader economy. High inflation and a rush by central banks to raise rates and stem the flow of cheap money has fueled sell-offs across markets, pressuring grains prices that had spiked to near record peaks following Russia's invasion.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.